Just to quickly recap, of course, the Governor of the Reserve Bank, Lesetja Kganyago, announcing that interest rates are up by 75 basis points, taking the repo rate up to 7% and the prime rate to 10.5%. Let's get more unpacking on this issue with Mike van der Westhuizen. He's an economist at Citadel, and Sanisha Packirisamy, she's an economist at Momentum, and we'll start with her. Thank you very much for joining us, Sanisha. So, of course, we've just been speaking to Mr. Balim at Standard Bank, and we were discussing the consumer impact. I just wanted to get that from you. What does this all mean for the consumer? The market expected it and no doubt is celebrating this decision, but what does it mean for your average consumer who's highly indebted?
Thanks, Nompu. So having seen the interest rate now above pre-pandemic levels does suggest that debt servicing costs for indebted consumers has risen. And that means that there's more money that's being allocated to servicing debt and taken away from other spending on items in the economy. As a result, we do believe that the consumer is in a weakened position. And going into next year, we believe that a number of headwinds are mounting for the South African consumer, including a reasonably bleak employment outlook on the back of the growth forecasts that have been penciled in from the South African Reserve Bank, together with bleak consumer confidence and, of course, high food and fuel prices, which are raising the cost of living for consumers.
Mike, let me bring you in here, and just in response to what Sanisha is saying, what then do you think this is going to do for a sector like the retail sector, which of course really relies on the consumer to go out there and spend a buck or two?
Yeah, it obviously has a negative impact on the retail sector. So yeah, with increased debt servicing costs, obviously consumers have less disposable income to spend on more discretionary goods. So that sucks a lot of capital and spending out of the retail sector, and of course, with higher interest rates, your growth, GDP growth, gets affected with a sort of a 6 to 9 month lag. So that for many sectors in the economy, that's a headwind.
Yeah. So, Sanisha, one of the issues, of course, is the drivers behind inflation, because the Reserve Bank does see that the inflation outlook is the threats to the inflation outlook are to the high side. Just paint for us the picture of some of the issues that you think are quite crucial as we go into 2023 around affecting inflation and its trajectory.
Well, Nompu, I think what was quite telling in the recent October print for inflation that came out of Statistics South Africa yesterday was that a larger portion of the basket is now showing signs of increasing above 6%. So we had 11 out of the 28 consumer-related items in the CPI basket that now have pricing pressures that are escalating at a rate above 6%. And this is much higher than what we saw in previous months. We've also seen that on a weighted basis, above 40% of the basket is now escalating above 6%. So there are indeed signs of a broadening out of inflationary pressures. And even though we had the Reserve Bank increasing their estimates on inflation, particularly core inflation for next year, they still deemed the risks to this inflation outlook to be to the upside. And they mentioned a number of factors, including administered prices, of which electricity tariffs are quite a big component. They've also included the potential for wage settlements at the public sector level to surprise to the upside. And these are all elements that could actually generate a higher level of underlying inflation, which is really what the Reserve Bank is trying to target in order to prevent persistence in inflation.
Yeah. So, Mike, just feeding into what Sanisha is saying, of course, as the cost of living rises, people are going to expect to get a higher wage. We see that with the public sector, and of course, everyone's keenly watching what happens in that regard. And of course, the Reserve Bank also did indicate that it does have an expectation that there's going to be a gradual increase in wages over the next year or so. What's your expectation? And of course, I mean, at the end of the day, this is going to have an impact on businesses because they can ill afford the increases because of the higher cost of doing business.
Yeah, of course, it's very dangerous when inflation expectations start to rise and become unanchored, like we're seeing. You know, the governor alluded to higher inflation expectations, close to the 7% mark, which obviously then feeds through to wage negotiations and employees and unions expecting higher wage increases. I mean, it's going to be a very tricky balancing act. Obviously, at government level, we've seen the pushback from Treasury for government wage increases to be at those levels. And of course, employers, are they going to have to cave or and sacrifice margin in order to raise wages? So it's very important that the SARB, hikes rates in order to stabilize inflation expectations and bring those down. And with that, hopefully wage increases then get marked down to a more prudent type of increases.
So Sanisha, let's look at the growth picture. Is it fair to say that until we get more electricity supply from renewable energy, and that's going to take time, maybe the next 12 to 18 months, we're really going to see the economy in a state of limbo, in the medium term?
This tepid growth picture seems to be persisting on the back of a slow pace of economic reforms. In the last couple of line items that the Reserve Bank mentioned in their MPC statement today, they alluded to the fact that they cannot do this alone in order to prop up economic growth in South Africa. They do need the help in terms of coming through from the fiscal side. They do need the help coming through from the government on terms of reform in order to generate a higher rate of economic growth, but at the same time to do it in a fiscally responsible manner that doesn't induce higher rates of inflation. And you've seen, examples of this panning out more recently with companies like Telkom suggesting that their profitability was hit because of the diesel costs associated with load shedding. We've also seen this happening with a number of miners and manufacturers that are now swapping from actually using the freight railway system to actually moving their goods to the road transport system, which of course comes at a higher cost. So this is all bearing quite negatively on businesses' bottom line. And of course, that does then feed through into weaker growth prospects for the South African economy.
One of the issues that the governor touched on was our trading relations, talking about the current account deficit coming down quite substantially over the next few years, which basically means that the value of what we're exporting is going to be less relative to what we're importing. What does that actually mean from an economy point of view? Is it a good thing or a bad thing?
Yeah, so we've had a nice tailwind in terms of current account. The commodity boom that we've seen over the last couple of years has really boosted our current account surplus. And with that, you traditionally look at something like the exchange rate. So the current account surplus traditionally means your rand gets a lot stronger. So with the tailwind turning into headwinds and your current account deficit getting a lot larger, it does present some headwinds to the currency, and we've seen that correlation pick up quite a lot over the last couple of years. So some pressure on the exchange rate from that perspective.
Yeah. And Sanisha, of course, one of the things that we always hear about is that our structural reforms are not moving fast enough. But on the other hand, we're also hearing that the global economy is not likely to do well come 2023. And we've heard this from the likes of the World Bank and the IMF. Which one is more important, or do they both need to gel together for us to see some sort of hope in our local economy?
Well, Nompo, you can get a double positive whammy when global economic developments are in our favor and we have structural reform that is on a firm path to showing significant progress. Unfortunately, we're having a double negative whammy where we are seeing slow progress being made on the energy and logistics side, and we are heading into some severe global headwinds going into next year. So if we look at our top exporting trading partners that make up half of South African exports, we are expected to see much lower rates of growth than what was anticipated at the start of the year. So here I'm looking at China, the US economy, Germany, the UK. It's really only Botswana and Mozambique that make up part of our top exporting nations that are experiencing better growth rates next year than what was believed to be the case at the start of this year. So unfortunately, those negative global headwinds means that lower global demand is going to point to lower exporting volumes for South Africa. And on the other hand, the local dynamics are also letting us down in terms of slower progress being made on those structural reform efforts to boost potential growth.
Mike, let me come to you as we conclude and giving you the opportunity to give us your wrap-up comments, really. But I want you to focus really on how we're doing in terms of those structural reforms and getting growth going, because we'll always be a victim in a high inflation cycle if we can't get our growth in order.
Yeah, I mean, in terms of the structural reform, we're slowly starting to see evidence on the ground. And you look at foreign direct investment, we're starting to see projects going up all over the place from solar. You're starting to see more companies bringing production, some of the clothing industry bringing production back into SA. So there's definitely positive steps being made. We obviously, as we await the ANC elective conference now, if everything runs smoothly, then there's some continuity within the ruling party, and then we can get that policy, more clarity on policy and better implementation. But it's going to take a monster effort across the board, from municipal level all the way up, in order to get there. And obviously, it's one of those things. It's a momentum thing. So, there's proven investment, proven people follow that, confidence builds, and you start to get the ball rolling. It's a slow process, but once it gets going, it's a very fruitful thing.
Yeah. So, Sanisha, let me put a cat among the pigeons there. Mike talked about if everything runs smoothly. Politics is very important in terms of how it affects economics. What if everything doesn't run smoothly and the market doesn't get the kind of leadership that it expects? What then happens?
I think one of the main concerns is that we do find ourselves in some sort of coalition government at a national level come 2024 and beyond. And that would result in a lot of indecision being made, a lot of policy uncertainty, and lagged progress on some of these structural reform efforts. So the politics do play quite a significant role in terms of determining South Africa's economic outlook. From the global side, however, we could be helped as the global economy starts to recover further down the line. But of course, we'd need to see the global economic recovery coming through, coupled with some local reforms to really accelerate South African growth by enough to generate a higher order of employment in South Africa.
Sanisha, Mike, thank you so much for your time and your insights on this very interesting day where we're now going to have to endure higher interest rates effective from tomorrow. That was Sanisha Packirisamy. She's an economist at Momentum Investments, and Mike van der Westhuizen. He's an economist at Citadel.